Today, we're going to learn how to read a story that's not told in words, but in prices. We're looking at a market profile chart, and trust me, it reveals the daily drama of the market. You know, the battles between buyers and sellers, those moments of agreement, and the sudden shifts in power. So, let's crack the code.
Yeah, I know. To most people, this just looks like a random jumble of letters. But by the end of this, you're going to see it as a story. Every single letter is like a footprint, showing where traders fought it out, where they found a fair price, and where they just aggressively rejected a price level. You'll literally be able to see the plot of the trading day unfold.
So, how in the world do you read it? Well, we're going to focus on just 5 key patterns. Think of them as the most important words in the market's vocabulary. Once you get these down, this whole complex puzzle just kind of transforms into a really clear story of what's really going on. Okay, our first word is the tail, and I want you to think of it as the market literally slamming a door shut on a price it absolutely hates. It's powerful, it's aggressive, and it's a totally unmistakable sign of rejection. And here they are, right in action. Down at the bottom, you see that thin buying tail? That shows buyers just rushing in to defend a low price. And up at the top, that selling tail shows sellers forcefully taking back control. These are not subtle hints, you know? This is the market's way of shouting no at a specific price.
So what actually makes it a tail? Well, it's not just one stray mark. It has to be at least 2 of these little blocks, we call them TPOs, stacked right on top of each other. Each TPO just means the market traded at that price during a certain time. So when you see 2 or more stacked like this, it means the rejection wasn't some fluke. The market tested that price, and the response was so fast and so strong, it left this sharp, thin footprint behind.
And this, right here, is why they're so powerful for traders. A tail isn't just something that happened in the past, it's a huge clue. The market is basically telling you, hey, I had a very strong opinion right here. And that's why these levels so often become major battlegrounds, support or resistance, the next time the price even gets close.
Okay, so our next vocab word tells a story all about speed and imbalance. We're talking about single prints. Now, if the wide parts of the chart show where the market found balance, these are the complete opposite.
You can spot them pretty easily. They cut right through the middle of the profile. They're these super thin, vertical columns with just one block per level. What that means is the market moved with incredible speed right here. It literally just sliced through these prices without even stopping to negotiate.
The key thing to get here is that only a single time period's block exists at these price levels, and that is a huge sign of imbalance. One side of the market, either buyers or sellers, was just completely in charge, pushing the price so aggressively that the other side couldn't even get a word in.
So why do they matter? Well, because the market looks at them as unfinished business. A proper, fair auction never really happened in that spot. So this creates a kind of vacuum, and you'll see the price often get pulled right back to these zones later on to fill them in. They really do act like powerful price magnets.
Now, let's talk about another kind of unfinished business, the poor high or the poor low. This happens when the market auction at an extreme just feels, incomplete, or even kind of lazy.
See how the top and bottom of these profiles look kind of flat? You've got multiple blocks all lined up right at the edge. Now compare that to the sharp point of a tail. This doesn't look like a rejection at all. It looks more like the market just got tired and gave up without a real fight. That, right there, is a poor edge.
So, a poor high or a poor low tells you that the auction just ran out of steam. There was no aggressive pushback, no rejection. The market didn't decisively turn away, it just sort of drifted away. And that implies that the extreme hasn't been properly tested yet. This comparison really makes the difference crystal clear. A tail is a finished auction. It's a sharp rejection. A poor edge, on the other hand, is an unfinished auction, a weak exploration. One is a confident no, while the other is more of a hesitant maybe. And that's what makes these poor edges feel so vulnerable and so likely to be revisited.
All right, our fourth pattern is all about a burst of new energy. It's called range extension, and it's a really clear sign that new directional conviction has just entered the market.
So typically, the market establishes an initial range early in the day. It gets comfortable, but then, bam, something changes. New information hits, or a big player steps in, and the price just suddenly breaks out of that comfort zone to explore brand new territory. That breakout is the range extension, and it's often the spark that kicks off a big trending day.
And here's how you can spot one for yourself. First, you just have to note the high and low of the first hour of trading. That's what we call the initial balance. Next, you just watch for the price to move outside that zone. Finally, and this part is really key, you look for confirmation. You want to see at least a couple of new time blocks printed outside that range. That's what proves it's a real move with real conviction, and not just a fake out.
So, we've learned the vocabulary. Now it's time to put it all together and actually read the market's complete story. Each one of these patterns is a word, right? And when you put them together, they form a sentence about what the market is trying to do. Here's your cheat sheet for reading the story. A tail is a loud and clear rejection. A single print shows you rapid imbalance. A poor edge hints at vulnerability, that unfinished business we talked about. A range extension signals a potential new trend, and the POC, or point of control, shows you where the market found fairness. With just these few words, you can glance at any profile and get the gist of the story.
You see, by spotting these patterns, you're no longer just looking at a chart. You're reading a narrative, a story of conflict, agreement, and conviction as it unfolds in real time. The market is always talking, always telling you who's in control and where it might be headed next. So the only question is, are you ready to listen?